Maverick traders, welcome out to your currency recap, February 13th. Corey here with you. We're going to take a look at meaningful news. Today it was the CPI. Inflation comes back into the headlines. We're going to take a technical analysis look at major indexes. And of course, we're going to highlight setups. We had a really good one yesterday talking about pound, kiwi, and some of those setups that were happening, and they moved 1%, that currency pair. So it was spot on.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was really interesting, and the focus here in terms of currencies and whatnot is the idea that there is not going to be a rate cutting cycle as aggressively, as quickly as markets had been pricing in. So the CPI really disappointed markets. Came in year-over-year inflation at 3.1%. That's still well above the Fed's 2% target. The Fed is not in any hurry to cut rates, especially not with the economy doing just fine, etc. So it's one of those situations where the market has to reprice and come to that conclusion. But here's the thing. We haven't really seen that big blow-off top that I've been talking about. I don't think we're there quite yet. I wouldn't be surprised if there's one more leg, one more kind of push. We'll see if we get it, but that would be my take, that this is a little bit of a shakeout. We'll try again, and then that might be the failure. Now, as we look at currencies, US dollar and British pound, by far and away the two strongest. We highlighted the pound yesterday in this currency recap. I'm going to highlight it again. We paired it up with the kiwi on the short side, and that moved 1%, that currency pair. So really spot on in terms of that opportunity. On a day like today, it was only oil up, and oil has really moved opposite. When the equity markets were booming, oil was the only thing that was lagging behind, and now it's flipped and it's kind of the opposite. So oil moving to the beat of its own drum, crypto with a little step back, but it's been on a great run. S&P experienced its worst drop today that it has so far this year, and you'd have to go back a few months to get back to a day where we had a bigger loss than that. In the crypto space, notice that the two big boys, Bitcoin and Ethereum, didn't give much ground, but the more fringe type of cryptocurrencies, not as big a capitalization and so forth, Litecoin hit the hardest. Bitcoin Cash also got hit. Equity markets, look, we're still in an uptrend. We're still above a rising 20, rising 50. I'm going to give the benefit of the doubt a little bit here to the bulls. We're in consolidation. We're in a pullback, but we haven't really seen that ramp as dramatic as I kind of expected it to be. So I'm holding out for the idea that this is probably still just a little bit more of the choppiness before we get that ramp. And if you drag a trend line up here, you can kind of see that we've been moving in this channel here from lower left to upper right, something along these lines. And look, we got towards the top end of the channel. We're pulling back towards the bottom end. Probably going to be another day or two or so. But all of these little corrections and things, they've been bought up and we've gone back to new highs. So first things first, we'll probably try to dig in and fill that gap, get a little choppy here for a few sessions, and then maybe see that final spike. I don't think it's too far off. Within the next couple of weeks would kind of be my idea of how things play out. Now, we talked about CPI being a big one. It came in and it just was hotter than expected. It's just not what they wanted to see. The expectations were for 2.9. It came in at 3.1. The expectations for 0.2 and 0.3, and they came in at 0.4 and 0.3 and so forth. It just was hotter than markets wanted. On Thursday, skipping Wednesday, there's employment out of Australia, but Thursday's the next day where we get retail sales Empire Manufacturing, and then on Friday we get some PPI numbers. So there's a little bit more, but there's no question CPI was the big focus today. Now, when we take a look at opportunities, velocity scores, and such, we still like pound and US dollar on the long side, still matching it up with things like the Kiwi on the short side, maybe even Swiss franc. I mean, certainly the euro, which has been a little choppy. We had highlighted just a pattern, just a setup there. If you're playing crypto, I still think you want to stick with the bigger names, the Bitcoin of the world versus a Litecoin. Get out of the more speculative, get into a little bit more safe haven type of play, but still the uptrend persists. And then Canadian dollar, if you think that oil is going to continue to move higher, that could be good for the CAD. And the CAD's just trading a little bit better than its counterparts, than the Aussie, than the Kiwi and such. Now, in highlighting possible trades, I mean, there's not much difference in the chart from today and yesterday. Now, certainly it's gone up 1%, but when we look at this from the standpoint of this is pound Kiwi, where we were highlighting it yesterday and it's ramped higher, I think this is still an opportunity because the way I see this is a big long-term cup and handle like we talked about. And if this is a huge cup and handle type of pattern, ascending triangle, we've still got to move up to 209 and then quite probably the breakthrough through there. So it depends on your time frames here. If you're trading very short term, well, you could probably take some money off the table. But if you have a little bit more intermediate term idea there, you can at least trade this towards the resistance a bit further. I would continue to look at it as a buy the dip candidate. And then, like we said, we thought that a breakdown would happen. Boy, oh boy, did it ever. Look at that nice candle. Big spike to the downside. It was exactly what we had anticipated. This is euro pound, getting short euro and long the pound. And once again, I would continue to anticipate more downside, at least down here into the 84.80, 84.70s, some of those numbers down below current levels. So continue to trade those chart patterns. I think you can look at the technicals. I'm really trying not to overthink it too much and just trade the patterns. That's what's been working for me of late. And we had a good example of that with those British pound long setups yesterday into today, and I think there's more meat on that bone. So hope you enjoyed the currency recap. Everyone have a great night, have a great rest of your week, and we will see you next time. Goodbye, everyone.